When it comes to looking at entries on order blocks, there are two types of entries that you can use, both with their own pros and cons. There's the risk entry and the confirmation entry. The risk entry is an entry type that is much more aggressive in that you are placing your buy or sell limit order on an order block, looking for price to tap into it, tag you into the trade, and continue in your overall trade direction. While it doesn't provide as much confirmation, it does allow for an aggressive entry and provides a quick entry when you either are not able to be on the screens or if confirmation is just simply not available. So the criteria for this is you're identifying a point of interest on the higher time frame and using the lower time frame to refine that point of interest. Set a limit order on the refined order block for your entry. So an example would be using a 1 hour point of interest, refining that point of interest down to a 15-minute, setting a limit order on that 15-minute order block and waiting for price to tag you and then continue. The pros of a risk entry is that it provides entries to trades that will simply tap the point of interest and run. And it also can provide high risk to reward as the point of interest is refined using the lower time frame. Now the cons on the risk entry is that you get minimal confirmation for entry, so the likelihood of being stopped out is increased overall. The risk entry is best used when the point of interest and overall trade idea is with the prevailing trend, so looking for buys in an overall buy trend. It's best used when the lower time frame order block is within the higher time frame point of interest, and it's best used when approaching a trade aggressively, and it also is useful when price is correctively moving back to an overall point of interest. Now if we look at the confirmation entry provides a little bit more confirmation and is a little bit more conservative compared to the risk entry. The criteria for a confirmation entry is that you're identifying a point of interest using the higher time frame. You can refine using the lower time frame if desired. When price taps into that point of interest, you drop down to a lower time frame and wait for a break of structure in favor of that point of interest and enter off a newly created order block. The pros of using a confirmation entry is that it provides additional confirmation prior to taking an entry. You are seeing a change of structure or a change of trend in favor of that trade prior to actually taking the trade. And it also provides high risk to reward as the point of interest is refined and executed using a lower time frame, which can allow you to have a higher risk to reward. And a con to the confirmation entry is that you may miss trades that simply do not test the newly created order block on the lower time frame, or simply you might not get a break of structure that forms another order block that you can enter on, so the trade may just tap the point of interest and continue pushing to the downside. The confirmation entry is best used when the range between a higher time frame point of interest and a lower time frame refinement is quite large. It's also best used when price is rapidly moving back to a point of interest, so you're seeing, for example, bullish momentum leading back to an overall selling point of interest. It's best used when taking a counter trend trade as well, as you're getting that extra confirmation prior to taking that setup. And finally, it's best used when there are multiple point of interest or order blocks to consider. That way you're truly waiting for the market to show its hand prior to taking an entry. Now let's take a look at an example using pound US dollar for how to look for risk entries and confirmation entries. We're going to start on the 4-hour chart. And what we'll do right off the bat is we'll map out that price is moving in an uptrend. We can see that we're creating higher highs and higher lows. And price was moving in this overall range. We can see that we've created equal highs and we have now broken those equal highs, and we can see that price broke those highs impulsively. So what we're going to want to do first is identify 4-hour points of interest that we can look at to take advantage of long opportunities to ride the overall upwards momentum of this trend. So if we look at price action in this overall move, we can see that we broke this high. We can see that the origin of that move and the freshest part of that move would be at this particular order block right here, as we can see that price just kind of caught between the true momentum and imbalance was created after this candle that broke structure here. We can also look at this order block right here, and as we can see, we had a large move to the upside that broke structure just barely to the left. This is most recent structure versus major structure, and what we can see is price came back in to tap into the block, but met some sensitivity, and then that's when it exploded to the upside. So we can see that we have the origin of the move that broke structure and created imbalance, and we also have a point that created momentum, hovered around it, tried to tap into it, and then that's where it exploded. So we'll look at these 2 points, and now we'll refine them on the hourly chart. So now that we're on the hourly chart, let's refine these order blocks just a little bit further. We can see if we start at the top order block, You can see that price moved up, we've moved down, created a doji, and we have two options in this case to use from an order block perspective. We can see that we have this bearish candle, and the next candle did clear and break above the range, but overall not convincing. So we can either use this bearish candle or we can use this bullish candle. They effectively come to the same result, that this is the candle where momentum came into the market and then continued moving to the upside, which broke structure to the left. So then what we'll do is we'll apply the same logic to the 4-hour order block down here. And what we can see is we have this down move candle that moved to the upside, that broke structure. What we can see is price just ranged within it. And if we just keep moving price action forward, we can see that price came back in. So we can actually refine our order block to this candle right here, as we can truly see that momentum came into the market and moved to the upside. We can see that price came down to tap into that block, but was met with momentum that ultimately blasted price to the upside. So now that we have these order blocks refined in the hourly, let's take it one step further and we will refine on the 15-minute. So now that we're on the 15-minute, we can look at price action and identify if there is refinements that we can use. So if we look at our first order block, we can see that price has a down move candle right here, and we can see that price has not really moved, hasn't really moved until we get to this 15-minute candle here, this bearish candle with the large wick to the downside. So we can use this as our 15-minute refined order block, and then we can repeat the same process on this hourly bit of price action. So first we can see that we have a down move candle, price didn't move out of it. Same thing with this one, we created this large wick to the upside, so we just kind of keep following price. And we can see that momentum picked up in the market, but overall, seemingly, if we drop back on that, we have this larger range to facilitate, and the true move actually resulted after this move to the upside. We can see we've created imbalance and we've broken structure to the left from that move, so we can actually refine our order block ever so slightly to this candle right here. As we can see, this is the true beginning of momentum that moves to the upside, breaking structure. So now that we have our order blocks mapped out, we can plan for our long positions. So if we move back up to the hourly chart just one more time, and even the 4-hour chart, we can see from both charts that the move down to these order blocks is pretty aggressive. We have two very strong 4-hour candles, and even on the hourly chart, we see a lot of bearish momentum. So looking at that, I would want to approach this with a confirmation entry, and basically looking on a lower time frame for a break in structure that creates an order block, and then looking to enter on that order block so that we have a confirmed change of trend on a lower time frame before we try to catch this falling knife, where if we were to take a risk entry, we would put an order on this 15-minute order block and hope that price tags in and goes. And you can see that I use the term hope because we're coming at it so heavily. There isn't a whole lot of confirmation, and we're essentially trying to catch a falling knife, so a confirmation entry would be ideal. Although we are moving to the upside, we can see that we are in a clear bull trend. It is something to be mindful of, looking at the overall momentum returning to the block. So now let's go down to the 15-minute chart, and we will play price forward and see how we react to these blocks. And we can see that price has now tapped into this block, and we have created this very large momentum candle, which is why I had said that I wouldn't necessarily want to look for a risk entry, as we could get tagged in and out very quickly. And if I just move to the hourly chart, we can see that the bearish momentum has not slowed down at all. We can see that this is one large consistent move to the downside, very strong. So what I would be waiting for at this point, if I were looking too long at this particular 4-hour order block, is some sort of bit of change of structure, creating a low, breaking that low. That way we get a clear high that breaks structure, forming an order block, and then moving to the upside, looking to enter right here. Because in its current state, we'd have to get price to move all the way back, breaking this bit of structure before we could look for an entry down. I'm not saying that won't happen, but the range is much larger than if we were to look for a subtle change in structure, something like that. So what we can do is we'll just keep playing price forward and see if we get a confirmation entry. And we can see that price is ranging. Right now we've created equal highs. We've now broken structure to the downside. So what we'd be looking for is a break of this high here, a move back down in, looking at potentially this order block. if we break structure, of course, to look for an entry to go long on this 4-hour, 1 hour, and 15-minute order block. So what we can see is price has now gone lower, which would, for our purposes, invalidate this block overall. And what I'll do is I'll move up to the hourly chart. We can look at price action as we're approaching this lower 4-hour and 1 hour order block. Now, if we look at price, we can see that we were very aggressively coming to the first order block. We started to become corrective, but ultimately breaking below the block. So when we're looking at this is actually a good sign, seeing how price is now failing to create any significant lower lows. We are still putting in lower lows and lower highs, but we can see that it's having trouble doing that. So when we're looking at this particular area for a buy position, we can actually look at it in two ways. We can either use a risk entry or a confirmation entry. And the reason why we could use a risk entry in this case is because our overall trend is bullish. We can see that we are still making higher highs and higher lows. We have corrective price action moving back into that overall block, and we've been able to refine it on the 15-minute. So what we could do is put a pending order on the block itself, and we can put a pending order on the 15-minute block with a buy limit just above and the stop just below and look to enter long. Or we can also enter using a confirmation entry where we would wait for price to tap in, break structure, and then tap into a block and enter based on that. So the option is totally yours in this case. There's pros and cons to both. The pro of using a risk entry is price could just barely tap into the block and go, not leaving a confirmation entry. But the con would be that price would continue this overall bearish momentum and just continue down, basically tagging you in and out of the trade. Now, the pro of taking a confirmation entry is we would be waiting for a true bit of confirmation to take this entry long. That way we don't run into a situation where we basically break down and tag you in and out. And of course, the con on this is that price doesn't have to actually create a pullback to another order block after we break structure, and the trade will run without you. So in this case, we'll approach it with a confirmation entry just because overall the momentum is still heavily bearish. So we want to remain patient and focused and not rush things, since we've seen this block not hold nicely. Although we are starting to get corrective price action, the best approach for me in this situation would be to look for a confirmation entry. Let's just play price forward and see what happens. So we can see we're tapping into the block and we've created a bit of sensitivity. Now, depending on how you look at market structure, you could count this as a break to the downside, creating a lower low, which would mean your high would be right here. But in this case, I'm going to look at it using the type 2 method, using wicks for identification and candle bodies as a break of structure validation. So in this case, this wouldn't be a valid break of structure creating a lower low. This would just be a liquidity purge of these lows here. So my main low would be here, which would mean my high is still up top here. So if I'm looking for an entry, I'm waiting for price to break this high right here and then come back down in and look to enter on an order block within that structure. What we can see based on price action, if you were using type 3, you would have counted this as a break of structure, creating a lower low. We'd be looking for a break of structure to the high here, which we would look at this block for an entry. And as we can see, if we put an order here with a stop under here, so far we would be looking good. But since we're using type 2, we will wait until this high gets successfully broken to the upside. You can see price rallying to the upside. So we can see that we now have a valid break of structure right here. You can see that we have a valid break of structure of these highs now, which means we can look at entering using a confirmation entry. And what I'll do is I'll just move this out of the way so we can see price action clearly. So what I'll do is I will draw my point of interest that I would be looking to enter on. And as we can see, momentum came into the market here. We've created some imbalance that still can be filled. Our down move candle before the break of structure here. So what we can do is use this area as a potential entry, and what we'd be looking for at this point is price to come back down in and tag us into the trade right here and continue moving to the upside. So what we'll do is we will put an order with a stop just below this overall order block, front run it by about a pip, and you can see move that to the upside. Okay, so now that we have our trade set, we will see if price now comes in and taps our block. Of course, we can refine this entry on a 5-minute as well, but for the purposes of this video, we'll stick with the 15 minutes. And we'll see, okay, so we get tagged into the trade and price begins moving to the upside. So we're now in this trade. Now if we look at the hourly time frame, we can see added confluence that we had a low here and we broke it using this candle, and we've created a lower low right here. So our high would actually be in that same spot as the 15-minute. So we have a 15-minute break of structure and an hourly break of structure. And what we can see as well is we have an hourly order block as well that's within the 15-minute order block that we're looking at. And this just shows the fractal nature of the markets, that we started on the 15-minute, but it actually replicated to the hourly chart. So now when we're looking at this trade, there's a few things that we want to keep in mind as price continues moving to the upside. We can see that we have an order block here, price broken structure, and we have an order block right here. You can see that we have this rapid move to the downside that's creating imbalance, which is what price is ultimately filling. And if we just move up to the 4-hour quickly, one thing to note is because we created these equal highs and we've broken those highs, sweeping the liquidity and seen a large push down, one thing to be mindful of is that we could be seeing this area as an overall 4-hour order block because of the liquidity it swept on the equal highs. So if we go back to the hourly, we can see that that's also in line with the 4-hour chart. So as we're managing this trade, you can see that we've broken structure. We could manage just below the low here. And at this point, what we'd be looking for is seeing how price reacts to this order block here. We can see that we have a 15-minute order block as well that we're tapping into. If price breaks to the downside, changing trend, broke the high here and then broke the new low here, that would signify a change in trend, which would mean I would want to manage it much more aggressively, locking in profits as that's starting to show sensitivity to the overall order block. So we'll just keep playing price forward and see what sort of price action we get. We can see that price is still just creating higher highs and higher lows. And ultimately, since we have this overall point of interest on the hourly chart, we would use this as a potential target. And again, we'd be looking for a similar situation, price moving up to this order block. And if we do get a break in structure, we would be taken out of the trade and we could look for potential short opportunities. So if we go back down to the 15-minute, we'll just keep playing price forward, seeing what happens. And as we can see, we've created a few small lows that we can use as reference points. So if we look at this low right here, we can see if price does break that low. And we've created a new higher high. Price just continues to push up to the upside. We've now created a low here, as well as a higher high here. So what we can do, just go to the hourly chart and we can see that we've broken this high. We can manage the trade just below the low here. As we can see, price pulls back and then continues up. And we can see that on the line chart as well. And what we can gain from this on the hourly chart, we're starting to see sensitivity to this overall order block. So we'll be mindful of this low here, as we've now created a higher high. And what I'll do is just draw on a break of structure as we're starting to see some momentum coming in. We're getting engulfing candles that are now taking over. And we can see that we've been taken out of our long, and we can now start to look for potential sells because we're in an overall point of interest that we're looking at. We can see the momentum coming into the downside. We have downward momentum to the left as well. We had the equal highs that has created an order block. And the way I would approach this trade as well is using a confirmation entry. And what we can see if we're looking on the 15-minute, we have two different points of interest now that we've broken structure. We have this order block right here. And what I'll do is I'll just move this out of the way so we can see everything just a little bit clearer. We have this order block as well as this order block right here. So we can use either order block. I like to use the most recent order blocks. So I'm going to put an entry here as we've broken structure. We're starting to see a clear decline in price. And we'll add 1 pip to the stop loss for spreads and basically look to trade this back down into our overall 4-hour order block that we're seeing. So we'll play price forward and see if we get into the trade. As we can see, we've tapped into this order block, created a high, created a higher high, we had a low, and we've now broken that low. So we've identified an order block. In this case, it was more on the actual break of structure, which would be looking to trade short. So let's play price forward and see if we get tagged into the trade or what happens next. So you can see that we've been tagged into the trade and just barely kept in for now. And we can see that price is now moving very heavily to the downside and has returned right back to the order block that we entered our long position on. And this is a really great example of the power of the strategy using order blocks, identifying higher time frame points of interest on the 4-hour, and then using confirmation entries to look for high probability entries rather than just setting orders on order blocks and getting tagged in and out. When we were looking at this initial entry, we can see that price didn't create a break of structure to the upside that gave us the opportunity to buy, so we were able to effectively filter out this trade. When we looked at this overall bottom order block, we did get that opportunity where price tapped into the block, broke structure to the upside, returned to the newly created order block, and then ran up to the upside. We were then able to identify bits of structure on the charts to see where price could trouble getting past and see ultimately could have trouble getting past and ultimately seeing reactions off of. But again, using the confirmation entry, since we see the momentum in the markets, the imbalance that it's creating, we're waiting for a higher high that then breaks structure to the downside and then looking for an order block to take the entry short, as we've now seen the trend going bearish, which gives us a good indication that sentiment is changing. And what we can see that adds additional confluence to this trade is that price is overly corrective getting back to this top block, whereas when we're looking at some of the smaller, lower probability ones, we can see that price was very impulsive leading up to it. So if we used a confirmation entry, we can see we never actually broke any of the lows that were created here, which didn't give us an entry signal. So it would have filtered any sort of loss that could have been incurred if we simply just traded off of these blocks in itself.